Welcome back everyone to an amazing video. It's your humble and gracious host Hima. In this video I'm gonna show and prove to you that this is not the end and why you shouldn't worry, and instead what you should do. Without further ado, let's jump in. Alright, so look, I know things are bad right now. My thoughts and prayers for everybody who is innocent involved in this war. We don't need this right now. What we need is peace. I hope things get solved without turning into bigger conflicts. Alright? But damn, if I go to YouTube or TikTok, it's so much negativity. All you're gonna see right now is, this is the end, this is getting over. But I'm gonna tell you why a world war might not necessarily be a bad thing for financial markets. Okay? So far we've had two world wars. The first one is from 1914 to 1918. The second one is from 1939 to 1945. Alright, so right now I'm looking at the Dow Jones, the oldest stock index in the world. So let's find out what happened to the Dow Jones during these great wars. Okay, so the first one started in 1914 after the murder of French Archduke. I'm sorry if I mispronounced it. It started in 1914. As you can see, the stock market went down from 1917 to 1917 December. From March to December, the market did go down, but then again it recovered. And then it went back down again for almost 2 years. Then what happened was the World War is finished in 1918, and then we had one of the biggest bull runs from 1921 to 1929, which is exactly 8 years before the Great Depression. And this is what happened during the Great Depression. This is the biggest crash, one of the most notable crashes that we know of. I wouldn't say it's the biggest crash, but it's definitely notable. We did have the Spanish flu. Let me have a look. Yeah, so we did have the So we did have the Spanish flu from 1918 to 1920, which killed thousands of people, and this was also during the World War One. And then after Spanish flu was over and the World War was over, the market had its best years before it came down. So what happened here was inflation rose really high. And then of course people couldn't afford things, and the market crashed from 1929 to 1932. How many years is that? That's like 3 years. And then the market went through this accumulation phase. It did recover, and then we had the World War II, and the market came down back again, and then it went sideways for a while, and in 1941 it crashed to the same lows in 1930s after 10 years. So from this period to this period, market didn't actually do anything for this 10 years. The market just stagnated, didn't do anything. And then after the World War II was finished, market had one of its best bull runs till Black Monday, which is this day, 1987. So Black Monday, what happened was stock market crash of October 1987. So US markets fall more than 20% more than 20% in a single day. It is thought that the cause of the crash was precipitated by computer program driven trading models that followed a portfolio insurance strategy as well as investor panic. So something happened in the Wall Street, and then boom. So from 1944 to 1987, the market actually recovered and went on to do great things. Except for this period, this is the great accumulation period. As you can see, it's kind of similar to over here, but still it's far better than here. From 1965 to 82, the market actually went sideways, and then it had a bull run for 5 years. Boom, came down. Okay, now did these and the 86 crash and none of these things, does it have to do anything with the wars? No, because the market actually, after the first world war, which is from here to here, the market did recover and went on a full bull run, and then it crashed again. The second world war just happened in a short period of time, but afterwards the market did recover. So if we go into a global conflict with Russia and everything, it's gonna be a nuclear war. If it happens, we'll all be dead, which is bad. But if it doesn't go into a nuclear war, I don't think this will affect markets. What you're seeing is panic selling. My biggest concern for markets is inflation, and have something like this Great Depression happening again. That's my biggest concern, and we are actually 100 years from this right now, and every 100 or so years they say that something like this will happen. But who knows? Who knows? We're closer to it, so let's find out, right? But don't panic, please don't panic. This is the same kind of principle for crypto markets, even though crypto markets are different type of asset class. The same people who have stocks trade the cryptos, so it's the same psychological level of confidence and anxiety. It's the same people. It's not aliens, it's not the aliens that come and trade crypto. It's just same people. So that's why you shouldn't panic. Just calm down and pay off your debt, increase your cash flow, and ready to buy the dip. But of course, wait until we reach a technical bottom. That's it for today's video. I hope you guys learned something. Please don't panic. And my prayers and thoughts for everyone who's involved in this conflict, everyone innocent who's involved in this conflict. I'll see you guys in another video. Until then, make love, not war.